Hello, everybody. Welcome to Thursday. The S&P 500 was down a grand total of 0.02%, very close to zero today. It was actually up in the morning. We got a good report from Netflix, got a good report for Taiwan Semi. The semiconductor stocks started running really well. The market was up, into record territory, record close territory. And then ironically, we got a report on consumer sales, retail sales, which was really good, much better than expected, which you would think would really jump the market forward. But here we are in this inflationary environment where there's an expectation for some rate cuts happening this year, and that expectation is going to be dialed back more and more. We got that great jobs report that came out. Now we're getting good retail sales. Those types of things that are happening that are making it, first of all, look like we're nowhere near a recession, which I think is a good thing. But also, that the Fed might not be cutting rates as much as the market expected. And some of the pricing that we're seeing in the market right now is an expectation for, some bigger rate cuts. I do think it kind of brings onto the table, more and more the fact that they might not cut rates in November. That is still out there, still a minority opinion in terms of the traders as far as that goes. Probably take some more, strong reports coming out between now and November 7th. But it's been I think these types of things, when good news is bad news, in the end, good news is good news. I mean, if we stay away from a recession long term, I think that's a really good thing. It doesn't really matter where interest rates are as long as the economy continues to grow, earnings continue to grow, and the stock market will continue to grow with that. I mean, we had one of the greatest runs in the history of the stock market from 95 to 2000, and interest rates were a little bit higher than they are now. So it's not really necessary to come down per se, although, it's a little hard to tell because you're kind of looking forward, 3 to 18 months when they do these cuts. Are we going to need them now for that time frame? That's what makes the Fed's job so difficult. However, I still think that the retail sales report being strong is a really good sign. I would like that much more so than the opposite, where the retail sales were down more than expected. And now all of a sudden the market's kind of freaking out about the Federal Reserve maybe being behind, like they were this summer. We had that 8.5% drop in the S&P 500 in August, July through August, because of reports that were coming out that were showing, a weaker job market, and maybe we're already heading for a recession. And all of that turned out to be unfounded, at least so far. So good day. There was still some gains to be made. There's a lot of green on the charts. Lots of different areas still did quite well today. Just overall the S&P 500 was down. Nvidia came back up. That's a good thing too. We had that one bad semiconductor report coming out of Europe that drove that market down for a couple of days, and today we got a little bit of a bounce. So we'll see how that plays out too. So look forward to seeing you tomorrow. Of course, we do the show tomorrow, Talk Money with Tom on YouTube, 12:15 to 1 Pacific time. I'll do a summary for what I saw happening for the week. You can ask live questions. If you want to join me, please do. I look forward to seeing you then. Thank you.